Welcome to Between the Lines, the podcast that dives deep into the stories redefining Asia-Pacific's reinsurance landscape. Recorded here in the newsroom of Insurances in News in Hong Kong. I'm Andrew Mullen, Deputy Editor, stepping in for Editor-in-Chief Mithun Varkey, who is in Singapore for the International Union of Marine Insurers Conference. We'll be hearing from him later. Joining me in the studio is senior reporter Aidan Gregory, reporter Joana Nguyen, and intern Roshan Nambiar. In this episode, we will discuss goings-on in Singapore and also another big event in Monte Carlo, the Lloyd's results, ongoing protests in Indonesia, and a roundup of M&A activity. And our special guest for this podcast is Wei Wang, CEO of Rare Earth Partners. He talks to Mithun about the Chinese reinsurance market and about the latest goings-on with the broker.
China is our most important market. To get the license in China has been our business plan for many years. That is not easy thing to get a license here, the regulatory and such things like that. Luckily, we obtained the license there last year by a successful acquisition. In the meantime, we established our main strategy in China with that license. That is to be a wholesale direct broker. That makes us a bit different from traditional direct brokers.
First up, it's been a big week for the region with the International Union of Marine Insurers, or IUMI, their conference taking place in Singapore. That has seen around 800 delegates descend on the Lion City, as well as our very own Editor-in-Chief, Mithun. He is in and out of various meetings, interviews and panel discussions, but he stepped away to have a brief chat with us.
Thanks, Andrew. It's been a few days in Singapore. The National Marine Insurance Conference, their annual conference. There's quite a lot of excitement around the event among Asian insurers and brokers. The hottest topic is tariffs and geopolitics. There's quite a lot of conversations around it, but it doesn't look like anybody has a clear idea. I think what's worrying most underwriters and most insurers is the uncertainty around it and the volatility that creates. The other big game obviously has been around the geopolitics in terms of wars, etc. That's a really interesting conversation, starting with Neil Roberts, who's the head of Lloyd's Marine and Aviation, as well as a few other underwriters. I think they continue to feel that the markets, the insurers can continue to support the world market. It's still quite sustainable, which is quite a relief, unless there is a significant intensification or escalation of events. So there were two other big topics they're trying to talk about. One is obviously transporting of EVs. There's fires that have been big concerns. They've come out with a paper, which is quite interesting. We've been writing about it. You'll see piece around that paper and standards they're trying to use. And finally, it's about AI. I think there's quite a lot of excitement around the use of AI, around writing planes, as well as for, modeling, etc. There's also a bit of concerns around challenges that AI bring in terms of hallucinations, data, etc. So quite a lot of interesting conversations.
That was great to hear from Mithun from Singapore, and please keep an eye on the website for his stories in the coming days and weeks, as I know he's spots some very heavy hitters from the marine insurance market while he's down in Singapore. Next up is another big meeting in Monte Carlo. That is the Rendezvous de Septembre. We heard from Aon Reinsurance Solutions International CEO Alfonso Valera. He was speaking as part of Aon's renewal season briefing on the eve of the event. You can read the full story on the website, and that's from our reporter Marcus Alcock, who was in Monte Carlo for the event. Valera said the upcoming 1/1 renewals will be dominated by Asia and China. He also commented on the encouraging prospects currently being offered in the Indian market, with a particular reference to Gift City. Valera had started the briefing by pointing out that we are now very much in a buyer's market, and that in general across markets, demand for reinsurance remains strong, with the reinsurers now heading into the renewal season off the back of a very firm base. We'll also be hearing more from Marcus in Monte Carlo later this week and into next week, so particularly keep an eye on the website for his key takeaways to find out what happened down in Monte Carlo. Staying in the region, the ongoing protests in Indonesia are across the news. Roshan, you've been on top of that from an insurance perspective.
Yes, so since late August, Indonesia has been rocked by protests, which began in the capital city of Jakarta. It was sparked by economic frustrations over cost of living concerns and criticisms of parliamentarians' high salaries and housing subsidies, but it escalated following police involvement in the death of a delivery driver in Jakarta. So I spoke to multiple brokers and loss adjusters about the possible losses. One of them said the widespread reports of property damage and business interruption clearly illustrate that losses will be in the millions of dollars, and it mostly accounts for arson and looting, whether it is insured or not. If the protests continue to escalate, the losses will be substantial. So in terms of the effects on the reinsurance industry for this event, Some of the sources said that due to the resilience of the PVT market, this event is unlikely to create a large risk for insurers. But there is an opinion that because Indonesian clients usually buy sabotage and terrorism only policies, which are already covered under property insurance and similar risks. However, the events might cause property insurance to rethink the coverage and shift more responsibility to PVT insurance. So as the protests develop, this is worth keeping an eye on.
Thanks, Roshan. That was great and a really interesting story with some great comments. It's definitely something we're going to be keeping an eye on. I'm sure we're going to hear more from our contacts and as this event unfolds. So next, Lloyd released its results last week. Aidan, you've been across that.
So Lloyd's reported its half-year results last week. These are the first set of half-year results since Patrick Tiernan was appointed as CEO in June. The results showed that Lloyd's gross written premium grew to 32.5 billion, so up from 36.6 billion in the first 6 months of 2024. However, Lloyd's combined ratio increased to 92.5%, an increase which has been blamed on the various natural catastrophes that have happened recently, including the LA wildfires, which was a substantial industry loss. Unfortunately, Lloyd's doesn't provide a breakdown of its Asia Pacific numbers. However, Tiernan has said that Lloyd's is actively looking to expand in Asia Pacific and Africa and the Middle East.
So yeah, this will definitely a story we're going to keep on top of in terms of Lloyd's expanding into emerging markets, particularly in this region. Next up, we have a story that's been trending on our website since it went up. It's been one of those popular stories on our website. This is Rebecca Poon, who has been with Marsh Hong Kong for 42 years. She was most recently head of corporate at Marsh, and she's now switched to Howden as their chief client officer. This was an exclusive we had. Mithun had this story, and we had it clarified and verified, and she's going to be switching over when she wraps up responsibilities with her current employer, which, given 42 years, it might take a bit of time, but she's decided to make that switch, and we'll watch this space, see what that means. Next up, we're going to look at the M&A market, especially in APAC. Aidan, you're across that.
Yeah, I've been speaking to sources about the M&A outlook, as we head into the final quarter of 2025 and 2026 approaches. We've been speaking to people about their expectations for M&A within the insurance industry in Asia Pacific. And, there are a number of interesting dynamics going on at the moment. Obviously, it's such a big region and, it contains very mature markets like Japan and Australia. And, it contains other extremely fast growing markets like Thailand and Vietnam and Indonesia. So the dynamics are a bit different in each of these jurisdictions. But based on the people that we've spoken to, they've identified a number of areas where people are expecting a pickup in deal flow. So, for example, the Japanese carriers are sitting on large amounts of capital after being forced by regulators to unwind their cross-holdings in other Japanese corporates following a price-fixing scandal. This is going to have a massive impact on, the M&A market. And, already we've seen Sompo move for Aspen Insurance in the US. These cross-holdings have freed up billions of dollars of capital that has to find a home somewhere else. Either has to be returned to shareholders through dividends and buybacks, or it has to be reinvested in other assets. And this capital is widely expected to flow into other international markets such as the US, Europe, and Southeast Asia as well, which has very favorable growth dynamics compared to Japan. Southeast Asia is also being cited as of particular interest for international insurers, particularly given as we head into what is expected to be a period of market softening when organic growth becomes a lot harder to find. The dynamics for life and P&C insurers in ASEAN, are particularly attractive given the growing middle class in these countries and aging populations. So Southeast Asia in particular is, seen as likely to be a source of inbound M&A interest. And we have already seen that earlier this year with Chubb's acquisition of Liberty Mutual's P&C units in Thailand and Vietnam. And sources expect this kind of activity to continue, whether it's either through outright acquisitions or joint ventures with local partners. It is seen as, being a particularly interesting topic in M&A heading into next year.
So one of the deals that have been announced recently is the acquisition of Steadfast Re by Gallagher. So Gallagher has expanded its APAC footprint by agreeing to acquire Steadfast Re, the reinsurance arm of Australian brokers Steadfast Group. Terms of the deal were not disclosed, and the completion is expected in the fourth quarter of 2025. So according to Gallagher, this deal will enhance its ability to cater to a variety of clients, including NGAs and mutuals. They look to build scale and specialist capability in reinsurance at a time when competition and consolidations are reshaping the APAC market.
Sticking with Australia, IAG's acquisition of RAC Insurance has sparked antitrust concerns. Aidan, you've been keeping an eye on this.
So last week, the Australian Competition and Consumer Commission, Australia's antitrust regulator, voiced its concerns about IAG's acquisition of the Royal Automobile Club of Western Australia. This is interesting for a number of reasons. Firstly, IAG has recently closed a similar deal to acquire the underwriting business of the Royal Automobile Club of Queensland, and it signed a multi-decade exclusive distribution agreement with these automobile clubs. So the template for the Western Australia deal is pretty similar to the Queensland deal that has already closed, albeit, it covers a completely different state in Australia. And it seems like now that the ACCC isn't very happy with the dynamics that are at play in Western Australia. It said last week that it's concerned about the effect that it will have on premiums for Western Australian consumers, and also the availability and cost of motor repair services if this distribution agreement and acquisition goes through. It's worth mentioning that it's not a final decision, and that the ACCC has called for input from all of the affected parties. So it could still go through, but then it could also prove to be, this deal could also prove to be pushing the envelope a little too far for IAG. We'll likely hear more in the coming weeks about what's going to happen with this particular transaction. And this is also happening against the backdrop of the fact that Australia has just moved to a new regime for merger control that's massively strengthened the powers of the ACCC to block takeovers earlier in the process. And it's put a much stronger obligation on companies to mandatorily report takeovers much earlier in the process. The Australian insurance industry is already highly concentrated, particularly in the carrier market. And, it remains to be seen whether in the future we are going to be able to see much more M&A on the underwriting side of things, just given the strict new regime and, how concentrated the market already is between the big three carriers. It's an evolving story, and there's likely to be a fair bit of drama in the coming months surrounding that deal.
So yeah, thanks, Aidan. Yeah, look forward to some more reporting on that. And next up, stories we're working on as a team right now. Joana, what have you got on your diary right now?
So recently I covered a paper published by the Actuaries Institute of Australia, which said that the Australian general insurers spent roughly 1.6 billion USD on reinsurance last year, which helped them to avoid needing up to 46 billion USD in capital to cover the costs of NatCat and other losses. So the paper's author, Kate Bible, chief actuary and head of capital of Aon Re in Australia and New Zealand, is open for interviews. So I plan to reach out to her for more insights into the reinsurance market in Australia, for example, like in terms of ILS or cat bond.
And we just had a story on W&I on the website today, but Roshan, you're on top of a longer report on that and really digging into this topic. What can you tell us?
Yes. So recently we published an article about the W&I insurance where Joanna and I received a significant number of responses from both underwriters and brokers, which we think can be turned into a long form report which expands on the article and gives more detail on the topic. For example, the gradual traction of synthetic warranty solutions in situations where seller warranties are limited or absent, or the need for more understanding of local nuances and risk profiles, as many of the underwriters have transferred from London to APAC.
Thanks, Roshan. We'll certainly keep an eye on that. And finally, Joana, you've been keeping an eye on Indonesia, not from the protest this time, but you picked up on an interesting news story that we saw recently.
So recently, there's been news that 3 state-owned reinsurers in Indonesia, National Re, Indonesia Re, and Tugu Re, will be merging. However, 2 of the 3 reinsurers are poorly capitalized and one has a large deficit. So there is concern that the new entity may have less capacity to absorb risks ceded by primary insurers, leaving, local insurers more reliant on international reinsurers. So I'll be reaching out to local reinsurance broker in Indonesia to see what they think on this.
Thanks, Joanna. That's a great place to end. Thanks, everyone. Let's get back to work. Next, we'll hear an interview with Mithun Varkey and Wang Wei, CEO of Rare Earth Partners. He's got some really interesting insights in the Chinese reinsurance market, and also he talks about the developments with the broker.
Hello, Wei. Thank you very much for joining us. It's a pleasure to have you on our podcast. Could we start with a little bit about yourself and also Rare Earth, how Rare Earth is positioned in the market in Greater China?
Firstly, why we make the company name as Rare Earth. I think there's a story. Rare earths are a specific element only in China. We set up our headquarters in Hong Kong in 2017. Of course, Hong Kong is the window of China to outside world. So our positioning in the market is we, as an insurance broker, like to be the bridge between China and the world outside to China. We can be that specific element from China, like Rare Earths. To bring the business opportunities and the development opportunities into the international world. Another meaning of Rare Earths, as a company name, is if you pick up the initial Rare Earths, that is RE, right? RE presents reinsurance. That means, we are from the reinsurance background. My background is I joined this industry in Singapore. It's talking about quite a long time ago. It's 2000, or probably it's before 2000 as the reinsurance broker. So the reinsurance broker is always my job until now, I think even for the future. So the team here, we have more than 10 years cooperation in the reinsurance industry, even before Rare Earth set up. So Rare Earth is a young company. It's only probably started the operation in 2018, but that company set up by a group of veterans in the industry. Back to China China, of course, I talk about our positioning. China is our most important market. To get the license in China has been our business plan for many years. That is not easy thing to get the license here. Because the regulatory and such things like that. Luckily, we obtained the license there last year by a successful acquisition. In the meantime, we published our main strategy in China with that license. That is to be a wholesale direct broker. That makes us a bit different from traditional direct brokers. The word of wholesale it's also coming from the reinsurance end. Normally we call reinsurance business as a wholesale business, right? And the direct business as retail business. So the traditional direct broker they are facing to the individual client and provide the insurance plan and the service to them. What we are trying to do is copy to the reinsurance model to the direct end. Perfect, we don't need to face every individual client. We provide the product or the business model which can offer various market demand to each direct brokers or other intermediaries such as the sales channels, platform, association. We can work together facing to the whole market.
So Rare Earth was started about 2018 as a reinsurance broker based in Hong Kong. And last year, you set up your mainland China operation in Shanghai with a wholesale broker. And that was through an acquisition, you said. So what is the opportunity for the wholesale business in China, as you were saying?
The Chinese market is our target market. And we can see a lot of opportunities there. And also, I think the majority team member, they have the kind of Chinese background. My colleagues in Hong Kong, all days we did the reinsurance to support the Chinese market. So from the reinsurance end, that is something like we get the order or the demand from the reinsurance company in China. We place those business out to say the UK or Asian. That is the old days we have done. Even from the old days, we have kind of idea to get a license in China. But as I mentioned, it's not easy thing. We need to handle a lot of matters with the government, the regulatory entities, a lot of things. But it's always on our agenda on that direction. So got the license last year. That means we can be the direct broker in China. Of course, that upgrade our position from the reinsurance end. In the meantime, we also seeing quite a lot of opportunities from the direct end. But how we realize or seize those opportunities from the direct end, we have our plan. So as I mentioned, we set up the strategy as a wholesale broker there. The reason is that the number one, we are from the reinsurance end, we have the capability to design the products, especially in some niche market. The number two is, for the moment, we only have limited resources for the moment. I mean, from the human resource point of view, we don't need to have to build up a huge sales team to service each individual client. Number three, we don't need to compete with the existing direct brokers. Bring the new opportunities to work with them. I think that is quite a brilliant idea. Yeah, I mean, that direction, especially we can cooperate on the direct end. Of course, we can't cooperate with those bigger brokers such as Marsh, Aon, Willis, but we target the medium and the small size broker and also the in-house brokers.
If I got it right, as a wholesale broker, it allows you to sort of build out quickly in China without having to build a sales force, also not to compete with clients and some of the larger brokers. That's quite interesting. I just want to understand, is there a focus for you in terms of business lines or within China? I mean, I understand the Chinese license can be quite complicated. You have a license in Shanghai, but is that a license to trade across the country? Or do you have to trade within Shanghai? In terms of market lines, do you have any business lines? Do you have any specific focus?
The first thing is answer your question. Our license in Shanghai is nationwide, but there is another rule for the regulation from the regulatory entity, AFRA. If you want to set up the branch, it's talking about the capital. It's a different capital. Yeah, required capital. Our license is something like 10 million, which is the capital. But if, for example, if you want to do the personal line business in some city in China, our license is in Shanghai. Even though that is the nationwide license, but if we want to do the personal line in another city, we need to increase the capital to 50 million. But it's all right for us because we focus on the reinsurance end, right? We handle those special rates, the commercial one, the commercial lines, or the commercial lines. That there is no limitation about that. Mm-hmm. So for us, that license is quite good enough for the stage because so far we don't have the detailed plan to move to the personal line end. Yeah.
I did notice that you have sort of a sort of marine background, especially with +8 partners, etc. So, is marine your focus, or are you going to work across business lines?
We used to focus on marine, and our background. I mean, the key team member is also from the marine end. Even today, it's not the majority, but probably a high portfolio of our business for marine. But we also need us as the specific risk expert is more than marine. And especially when we set up the company as rare earths, there's no limitation for us. We have to focus on marine or other lines. So our strategy or our plan is if there is an opportunity and also we have the capability or the resources, we just go there. It doesn't matter it's a marine or non-marine. Yeah, just say the opportunity. The opportunity is always in China.
Right. That brings me, it's quite interesting. I mean, that brings me to the question on the broader, I mean, you're a China veteran, you've been trading in that market for many, many years. There's quite a lot of interest among the wider audience around what's going on in China in terms of the Chinese insurance market, the opportunities there. How do you see the current state of the reinsurance market in China?
I think it has been developing rapidly in this year, China, but it never been a mature market like US, UK, or Japan. Not mature is not mean the development is slow. That is because of the changing happens all the time in China. Transformation happens for all industry every day. For example, China has been the biggest country for traditional manufacturing industry for quite a long period of time in the world, right? But today, I think every enterprise or the company has the plan to the direction of high-tech, AI, new energy. That is not only the obvious trend, but also what happens in every day. That brings a lot of new opportunities to us. In the meantime, it also brings the challenges, of course, to the insurance industry. We need to match up the changes and to create new products for the new demand. That is the current situation of the insurance market in China. Can say is both end, the opportunity and the challenge.
The market is changing rapidly. I mean, it's of course not a really mature market. For example, in the past couple of years, we went through a hardening market, and then now there is a sort of softening trend around the world. But China seems quite stable from a pricing perspective. It didn't go through that hardening cycle, and certainly not a very pronounced softening as yet. How do you see the sort of broader trend in terms of pricing and capacity in the Chinese market?
I think in the last 20 years, the China market, from the capacity end, it has been developed quite a lot. It doesn't like 20 years ago. They had to rely on the international market. Of course, nowadays, they also rely on the international reinsurance market, especially on the reinsurance end, right? But certain level, the China can solve the issue about the capacity within China. We can see a lot of things happens in the insurance market. So that's why Chinese market is quite unique. You can say it's quite international, but for some end, it's not very international because always, let's say, from the original, and for example, for every insurance company, whatever PICC, PNR, or CPIC, they had a very good relationship with the Lloyd syndicate, those international professional. Of course, today, they also have a very good relationship with them because they work together. But from the capacity end, they don't rely on them like before so much. So we can say the hardening market, or nowadays, it's a soft market, right? It doesn't affect the China insurance development too much. So, they have their kind of their own speed.
So there's enough capacity within the domestic market so that what's going on in the broader reinsurance market does not necessarily affect the local market as much as as much as in the past. Moving on, in terms of the sort of new regulator a year or so ago, there's been some regulatory changes in China. Are there any specific regulatory trends that's affecting the industry?
I didn't see much of that. Here, I just like to mention probably the new China reflexization of the Hong Kong Macau investment rules. That is a kind of a document from the government issued this year. I think the beginning of this year, because that of true that it eliminates the requirement of the 2 billion excess threshold for insured and enable the smaller firms from Hong Kong or Macau to enter the mainland market. I think this will encourage the regional collaboration very much, particularly in cross-border, say the product like the health and the retirement product, something like that, and introducing the global best practice in the underwriting, also the customer service. In the old days, for this area, the China is quite weak. But nowadays, they just want to develop this area further. Probably that regulation changed the thing quite a lot. You see what can happen in the region. Yeah. That is also our advantage because we have the head office in Hong Kong. Yeah.
Right. It can work across both the markets.
Yeah.
Obviously, I mean, what is the biggest challenge doing business in China from an insurance, reinsurance perspective? Are there specific challenges?
I think, of course, that is a good question and quite big question. Yeah. Yeah, because I'm the broker. I just say something from the broker's end, okay?
Yeah, of course.
Yeah. I think the biggest challenge from the broker now is how to match up with the changes on the new demand and the transformation of the industrial. This is difficult, in particular to those medium and small size brokers and even the in-house brokers. In old days, of course, it's not very old. Probably it's just a couple of years ago. Yeah, they only served several clans or even one or two clans because the relationship or historic story. And what they served is with the traditional products, and probably the only change is the price up down when the renewal. Right. But nowadays, that is a big test for their capability, I think. If they don't have the learning skill and the cooperation resources in the market, they are difficult to survive. Yeah. So I mentioned our strategy, the right strategy is to be the wholesale broker in China. We think we can work together with those medium, small size, or the in-house broker to face the challenge together. Yeah.
I just want to ask a question. Basically, you are placing these risks primarily in the Lloyd's market, London market. Are you a cover holder? Do you place your risk back into the Lloyd's market?
In the old days, we know that we are from the marine background. We use Lloyd's quite a lot. But when the hardened market happens, it's a couple of years ago, right? So we rely on the Lloyd's capacity less and less. Yeah, even you can see what happened about the Lloyd's China. That reflects what happens in the last couple of years. Yeah. So nowadays, we are going the two way for the placement. One is we use the local capacity. Yeah. We also have the reinsurance company in China, and also insurance company can provide capacity for from the reinsurance end. That is one way because we have the team in Shanghai, and also our head office is based in Hong Kong. It's very close to China. And the other way is we go overseas to seek for the capacity, not only from the UK, but also from Asian. For example, Singapore, even the Middle East, we also have it's not a branch, it's a subsidiary in UK, in London. And it depends on the different risk. If there's special risk and with a very high limit, and normally we call it the big risk, probably we need to go to the UK because the only capacity you can find is from UK. And for that kind of case, China had to rely on the capacity from overseas because probably for one project, you're talking about probably it's a huge amount, right? Yeah. But for the normal case, say it's not big property, we can use the local market capacity.
Domestic capacity.
Yeah.
Okay. Mm-hmm. Are there any specific sectors or regions in China that you're seeing significant growth potential in? How do you see that market evolve?
To answer that question, probably the two parts. The one part is the areas. Probably I just give the example, two areas we are focused on for the moment. I think, the various handles of special risk. So it's talking about the special risk here. What happened today, the new demand is the new energy storage risk, especially those battery for the electric vehicle. The China is the biggest electric vehicle in the world now.
Yes.
But it just happened in the last couple of years. Yeah. Not only the motor industry, but also others. They bring both new opportunities and the challenge to the insurance industry. For the moment, we are working with some close relationship insurance company together to design the new product and meet the new demand from that area. And also another example for that area is probably the offshore wind power. China also the biggest country in the world for that area for the moment. Yeah, that is one direction we are working on. The other one is the venture overseas, which is supported and promoted by the central government. That is after the Belt and Road Initiative. You can call that BNR Initiative Phase 2. The difference this time is the main body is those private and medium, small size enterprise or the company instead of those big state-owned companies. And the products also are different instead of those huge engineering, probably in Africa. Now are the Chinese interests manufacturing in overseas. That direction, that direction brings the new demand for the insurance and the service from the insurance end. So we also work on that, how to design and provide a kind of a package deal to meet the demand. Because that is quite complicated. Probably the client is not in China. The interest of the property is, for example, in Thailand. Yeah, right. So we need to do the expert not only in China, but also in Thailand to serve them. Yeah.
That's the next step for the Chinese economy. That's quite interesting. That's all the questions I have for you today. Thank you for your insights into the Chinese insurance market and also telling us about Ray Alert's plans in the market. Thank you very much.
You're welcome.
Well, that's all from us in this episode of Between the Lines. We'll be back again in 2 weeks. In the meantime, you can connect with us on LinkedIn and make sure you subscribe to our daily and weekly newsletters delivered straight to your inbox. And of course, we'd love to hear your feedback on the podcast. Email us at editorial@insurancesianews.com. I'm Andrew Mullen. Thanks for listening.